I know that you expect the dollar to fall by another 5% by the end of this year. To what extent do you see that as perhaps a cushion for stocks, and kind of operationalize that relationship for me?
So what's interesting is actually that we've been hearing for the last 5 years the dollar is overvalued. In fact, for the last decade, the dollar is overvalued. But interestingly, the dollar's overvaluation has actually dovetailed with foreigners piling money into US assets, particularly US equities. For the longest time, people could just hold US equities unhedged because they would also get a very strong dollar rally to support their portfolio. But now that's not the case anymore. In fact, even if SPX might have tried to jump back to levels pre-Trump, but the dollar has not regained any of its strength. In fact, I think investors now have a very strong reason to hedge their long US asset exposure, and the dollar is no longer behaving like a safe haven, unfortunately. I would say it's actually following much more of an emerging market playbook, which is, I think, the unfortunate truth that we need to come to terms with.
And I think that's such a fascinating and important point. Do you see the United States behaving like an emerging market right now from an asset class perspective?
Absolutely, because when we are talking about this big, beautiful bill, it's actually also leading to a big deficit concern. We're not addressing the problem that Trump said he would start out to address. And that's actually feeding into risk premia into both the bond markets, which is why yields are higher. And there's also clearly risk premia in the FX markets, which is why the dollar is really struggling to rally here. In fact, the euro is now stepping up as the liquid alternative safe haven, as you mentioned, in equities because of attractive valuations, but also in FX because it is cheap, and it is now the other safe haven that people are now looking towards.
Now, I can hear investors getting nervous as you're speaking about the United States behaving like an emerging market. So let's put a finer point on this. Do you think that the current mix of policies has the U.S. behaving a certain way within markets, or are you suggesting that long-term U.S. Treasuries will be treated more like a credit rather than, you know, its own asset class and a safe haven security?
I think that is the next biggest question that we are trying to answer for clients, that if we are talking about a big confidence shock, which you've seen, you know, remnants of that, the way markets have been behaving, the volatility associated with current administration's policies is a big confidence shock, which is actually forcing other countries to step up their local fiscal policies, work on fostering stronger trade relationships amongst themselves. Europe and China are now talking to each other. It's also forcing other countries to think about self-sufficiency and cutting dependence on the US.